The crypto market is at a crossroads, with Bitcoin and Ethereum showing early warning signs that the recent bullish momentum might be losing steam. But here's where it gets controversial. Are these signals a natural pause in the cycle, or a prelude to a deeper correction? Let's unpack the data that's fueling this debate. Analysts from Santiment have spotted a troubling trend in Bitcoin's on-chain activity. After hitting its July peak, the cryptocurrency's trading volume dipped into what's called a bearish divergence, a pattern where price action and volume flow don't align. Simultaneously, daily active addresses and network growth have been declining, like a car slowing down while the driver keeps their foot on the gas. This raises red flags about the sustainability of current price levels. The MVRV, market value to realized value metric, which measures the ratio of an asset's market value to the cost basis of all its holders, paints an even clearer picture. Bitcoin's long-term MVRV now sits at 21%, a level that historically signals limited upside potential as more investors find themselves in profit. Meanwhile, Ethereum appears to be teetering on a knife's edge. Its 90-day and 365-day MVRV ratios are at 40% and 57% respectively, numbers Santiment associates with a heightened risk of sharper corrections. The ETH-BTC price ratio is also climbing, suggesting Ethereum might be outpacing Bitcoin in relative performance, but this could be a double-edged sword. While Ethereum's on-chain volume has skyrocketed to $13 billion, reflecting growing adoption, such surges often precede volatility. Think of it like a rocket gaining altitude before atmospheric turbulence sets in. What's particularly fascinating is the behavior of investors. Whale addresses holding 10 to 10,000 BTC have been quietly accumulating since March without selling, signaling long-term confidence. Yet, retail investors are also piling in, and the synchronized buying activity usually spells trouble. As veteran trader Tim Ennis warns, Bitcoin may have already peaked in this cycle, and a drop below $117,500 could trigger an early cooling phase. It's like watching a crowd rush into a crowded elevator. Eventually, someone has to step back. Social media sentiment adds another layer of intrigue. Despite recent dips, buy the dip chatter has exploded online, which Santiment views as a contrarian red flag. When everyone's buying, it's often time to question the crowd. High MVRV ratios and euphoric on-chain sentiment should make investors sit up and take notice. Is this the calm before the storm? Or are we witnessing a textbook bull market consolidation? The answer might lie in the macroeconomic backdrop. The Federal Reserve's monetary policy and inflation data remain critical wildcards. Slower than expected rate cuts and geopolitical tensions are clouding the outlook, adding uncertainty to crypto's delicate dance. Ethereum, currently hovering above $4,400 and approaching its 2021 high of $4,792, is a prime example of this tug-of-war between optimism and caution. So where does this leave investors? The key takeaway is to stay hypervigilant. Monitor on-chain metrics like whale movements and MVRV ratios. Track macroeconomic indicators, and don't let FOMO override fundamentals. The coming weeks could decide whether Bitcoin and Ethereum maintain their upward trajectory or enter a prolonged consolidation phase. And this is the part most people miss. Sometimes, the best strategy isn't to chase gains, but to prepare for the inevitable pullback. What do you think? Will the market prove the bears wrong, or is this the beginning of a correction? Share your thoughts in the comments and let's debate it out.